Okay, yes, the market is down, but we actually have a bunch of restaurant stocks that are giving a chef's kiss to investors after strong earnings and guidance. Shake Shack, up 14%. That's a good move there. Papa John's Pizza, I love that ticker, PZZA, is up 1%, and Dine Brands up 1%. Chicken wing chain Wingstop earlier touched a record high of $223 and change after beating the street's first quarter earnings expectations, and year-over-year sales flew higher by 30.5% to $821.6 million, thanks to lift from college basketball's March Madness. And amid today's volatility, though, investors are now flying the coop, taking some profits with nearly 2,000 stores globally and a whole bunch of them as franchises. How does Wingstop plan to continue to soar? Look who's here, Wingstop President and CEO Michael Skipworth. Michael, notwithstanding the markets down here, we've got the Dow down 342 points, and we've got this regional bank situation. Tell me what you are hearing on the ground from not just your own company-owned stores, but the franchisees.
There's a ton of excitement within our system because, as you mentioned, we had a great first quarter. We delivered 20.1% same-store sales growth, but what's really important about that number is it is almost entirely driven by transaction growth, which speaks to just the underlying fundamental and strength of our brand. And we're doing this against a backdrop with favorable commodities, which is making our brand partners enjoy the best unit level economics they've experienced in a long time.
Let me be very clear, because we were talking about this in our meeting with the Claman Countdown team. You are a $6 billion market cap company. So when you see on the screen what we just showed you guys out there, 101 million in revenue, that is for the company-owned Wingstop stores. Let's spread it out to all the franchisees. How much money in sales came flying in during the quarter?
Yeah, if you look at our business on basically a trailing 12-month, we're quickly approaching $3 billion in system sales. A pretty exciting milestone that we're proud of. And another milestone we're really excited about is we just last week opened our 2,000th Wingstop within the system. That really speaks to the opportunity we have, which we really just feel like we're getting going or just getting started, where we see an opportunity to scale Wingstop to a top 10 global restaurant brand, which we see that consisting of over 7,000 restaurants worldwide.
Well, we've got some of your wings here on the set. I personally find wings incredibly frustrating because there's not enough meat for me to sink my little fangs into. But they look good. You got the French fries, you've got cookies now, a lot of other options. But how do you continue to evolve? I know you have some chicken sandwiches as well. And this at a time, I guess, that bone-in chicken wing prices dropped 52.8% year over year in the first quarter. That's got to be good news for your costs.
It's definitely good news. And again, those unit economics are as strong as they've ever been, which is fueling demand for growth with our brand partners. As we ended Q1, we have a record pipeline of sold commitments for another 1,200 restaurants. And we have a pipeline of approved sites that's setting us up for another record year of development this year, where we expect to open 240 net new restaurants, which represents an over 12% growth rate.
You know, we could deduce from one part of your earnings report how Uber Eats and Dash are doing, and that is that your digital sales jumped exponentially to a record 65.2% here. That to me is pretty interesting. What pattern or what trend do you see evolving from that?
We actually have an aspiration to digitize every transaction, and we continue to lean into ways to make the ordering experience more efficient for our guests. But then we're also innovating in ways where we can intercept phone orders, as an example, where roughly 10% of our orders today come in over the phone. And we actually, on our earnings call yesterday, talked about a test that we're expanding, where we're leveraging artificial intelligence to intercept those phone orders and translate them into a digital experience and a digital order for the restaurant. And so we see a ton of growth there, and that's just one of many multiple drivers we have that we think can set this brand up for several years of sustained top-line growth. In fact, we have an aspiration of growing our average unit volume, which is just shy of $1.7 million today, to north of $2 million.
I know when I ask CEOs this, they say, well, I don't know why a stock does what it does. But this is a pretty significant reversal. You guys hit a record high earlier in the session, and now the stock is selling off. And I'm just wondering if you were sitting with your team, let me just make a quick look here because I want to see exactly what it's doing. Right now, it's down about 4.5% to $208. This is a pretty significant swing. If you were to venture to guess why investors are selling the stock right now, what would you think?
You know, it's hard to predict what investors are thinking, particularly in a market like we're in right now. But we think there's a ton of upside, and it's such an exciting time to be part of Wingstop, to be a shareholder. We have a very unique model in that we're asset light, high growth. We generate a ton of cash flow, and we think it's a model that's positioned to continue to deliver best-in-class shareholder returns.
Michael, it's great to see you. Thank you very, very much. And heck, it's not happening right now, but congratulations on the record high on the stock. You got to love that. Thank you so much.